Afternoon all, how are you all doing? Afternoon Mumble, afternoon WestCheck. Nice moves today, yes, very nice. Still in Swiss yen. Afternoon David, it's time, how are we doing? Robert, Fletch, how are you all doing? Monday afternoon. Big markets today, big moves everywhere. There's another alert just came in. 175 on EuroCAD. So yeah, ADR's lit up like a Christmas tree today. There's no news today. It's a no news day, but obviously we've had the news over the weekend about the tariff deals. Afternoon, Virginia. Meh, how are we doing? So obviously that has made some serious waves. We've had, as you can see, there's a lot of red news come through this morning. So basically the EU deal is the main reason we've got these moves. Things like the euro pound, we're now over 200% of ADR. As you can see by the candles, we've literally not stopped selling the euro all morning. So everything absolutely cascading through the floor on the euro. Euro Swiss isn't moving because the Swiss moves with the euro. But everything else basically down. Australian dollar also down, so that's not moved as far. Same with the New Zealand dollar, but everything else on the move. US dollar a bit strong today, but not massive. Swiss franc down along with the euro. That's just tapped straight into a weekly. Literally just tapped straight into that weekly high. So very, very big moves today. So a lot of ADRs to look at. But I would take these ADRs with a little bit of caution. Anything Swiss or euro related, obviously, you are trying to mean revert a steam train at the moment. This deal does not look good for the Europeans. It looks like it's just going to cost them a lot of money, which is fine. But yeah, obviously not helping the euro. So that's the main news, obviously, which has kickstarted the markets today. The tariff pause with US and China looks like it's been extended. So there's still this deal to be done. However, obviously it's in place and the market has absorbed it, knows what it is, and is dealing with it. So I'm not sure that's really going to make a lot of difference. When we start getting some more movement on that China thing, obviously that will change the markets again a little bit. But that's really all that's outstanding now. So other news we've had this morning, Trump saying he's very disappointed in Putin. He's reducing the 50 days he gave them before he's going to re-sanction Russia. The draft budget has come out for Germany, includes record investment of 126 billion euros. Not sure where that's going to be invested, because 780 billion or something has got to go over to the US now. So yeah, that'd be interesting. But I'm going to make a new deadline for about 10 or 12 days. There we go. So he's having to go at Russia again, basically. So a lot of talk out of Putin this morning. Trump this morning. He's still going, look. We're doing well even without a rate cut. With the rate cut, we'll be doing even better. They have to cut rates. Again, he's keeping the pressure up on the Fed for Wednesday. So we went through the news this morning in the live room. But obviously, it's a massively busy week for news this week. Starting with CPI Wednesday morning for the Aussie dollar. Then we've got non-farm. We've got the Canada rate, Canada press conference. We've got the US rate, FOMC press conference, Bank of Japan rate and their conference. Then we've got GDP for the CAD. Then we've got PCE and unemployment. And then we've got non-farm payroll. So the unemployment rate for the US on Friday. So kicking off Wednesday morning, absolute chaos. So, it's going to be a really busy week this week. And obviously the market has come to life today. It's almost like someone's lifted a veil from the market. We've got this sudden movement of, wow, we know what we're doing now. So Euro, deal done. Japan, deal done. Pound, deal done. Canada and Mexico, not so much, but the deal is done. It's in place. They're not arguing about it. And that's what they're getting at the moment. That is probably going to change at some point. But the main thing is the China one, and that one is, again, stuck at the moment. Nothing's going to move on that for months. So I think this was the last sort of hurdle that we had to get over to really give the US some directional bias, and I think we're going to get that today, or from now on. So obviously Euro, if you're looking to mean revert these euro moves, you are trying to catch a falling knife and stand in front of a steam train at the moment. So at some point, it's going to revert this. Some of it. How much? Don't know. So just be a little careful. If you were in the euro pound and stuck in this, you've just got a 200 ADR like breathing room, which is lovely. So so loads of those to look at. We've already done the weekly range on the euro pound. So the average weekly range on the euro pound is 80. We've done 87 today. So this is the magnitude of this move. We've done an entire week's worth of movement in less than 24 hours, 12 hours. We've basically done this in. If you look at the 4-hour candles, it's just parabolic. So where this is going to stop, very difficult to tell. So all these euro pairs obviously are going to be struggling. I'm so gutted I didn't get that trade on this morning. There was no reversal alert this morning up there that triggered for me. So you can see my next entry was here, my next short. The reversal alert triggered there, but there was a big spread. The next reversal alert triggered here, which is just shy of my entry. So I just didn't catch that, unfortunately. Part of the game, basically, isn't it? So unfortunate. RSIs obviously have all flattened out because we're going back the opposite way. So there are a few of those to look at as well. But we'll start off with looking at what we're doing with the US indices. So gaps are in play or filled, or are they done? No. Okay, so we've got gap down for the NASDAQ. S&P, debatable whether that's done or not. It's pretty much there on the S&P. And the Dow Jones, we have done the gap fill already. So this is open for going either way. Dow looks like it's selling off at the moment. Let me just quickly place a trade on here. Somewhere around there. 5-minute hour, isn't it? Look at that spread. So have a go short on the Dow. So for me, basically, short trade on the Dow, long trade on the NASDAQ. So one of those is going to stop out. S&P, there's no range yet. So we're 50 points on 72 is the minimum ADR that I'll take. So need a little bit more movement here to get a trade on the S&P this afternoon, but hedged on these two. This morning's trades, really straightforward. DAX, so easy peasy today. That was your 5-minute ORB, broke short, straight down. I took a target on the bounce of the gap fill. Trailer stopped out on the pullback. Obviously, it's gone way bigger than that since. FTSE, same thing. So 5-minute ORB break short. Again, looked at the bounce play potentially in case they just did the gap and run, but they didn't. They came down. So I took the second part of it off at this resistance here. So I was looking at that potentially for a bounce point. And then half an hour, 40 minutes later, boom, we just collapsed down. This is Trump, basically. So really nice, easy trades today. 2,300 banked, which pays for Friday's loss. Going to stop out on the NASDAQ, and Dow Jones has broken short. Can I not sell any more of that? Wow, how much margin? Wow. Okay, so this prop firm I'm using, there's no they don't give you any margin. Okay. Well, this is going to be easy to get margin called, isn't it? So how do I add? So I can use 13,000 of my 19,000 margin. So if that pulls back at all, it's going to margin call me. Can't add to that, can I? I'll leave that. So how do I cancel that? Cancel. Pending. Cancel. Just want to stop. Just go away. Draft. There we go. Get rid of the draft. So I've got no risk on. Spare me a sec. I'll do that. Wow, this is a really good prop firm. We looked at these guys this morning. I can't even remember what they're called again. Anybody remember? Yeah, there's no margin on the indices. So that's going to be $300 for an ORB. Should have traded the NASDAQ. The Dow's too much on the Dow, isn't it? That's what it is. So I can get some more size. Not a lot, though. Oh, my God. The trouble with prop firms, you can't trade with any realistic lot size or anything. It just doesn't work, does it? Anyway, so we'll see where we go this afternoon. So haven't stopped out on the NASDAQ. We're putting an inside bar on the 5-minute ORB at the moment, and pretty much rejection on the lows on the Dow. So we'll see where we go. CAD Swiss ADR. So more movement on the Swiss franc. Obviously weakness on the Swiss franc ahead of with all the euro movement. So they're piling out of the Swissy, they're piling out of the euro, they're piling into the US dollar and the Canadian dollar. Well, not so much the CAD, actually. They're piling into the US. But so loads of movement. So if you're looking at RSIs at the moment, we've got the euro pound and euro US dollar. Obviously, those are now extended. We've gone from being extended above 75 this morning to already extended below 30 within 24 hours. That's never a good sign. It means there is a massive parabolic move underway. So just be careful of that. Euro US dollar, exactly the same thing. We're 150 ADR. We are extended to the downside. These euros, I would wait until you get some extensions below 20 so that you are really, really, really stretched. And then obviously just be aware that you might get caught in a bit of a start of a squeeze on these. I'm not sure how the market is going to take this euro deal. They've obviously looked at it over the weekend, or rather it only came into play sort of yesterday, really. But they are not liking it for the euro. So US dollar Swiss is obviously extended. That's to do with the Swiss franc and the euro moving together. So that is US dollar strength against European weakness. That is also an extension on your hourly. Your 4 hourlies are US dollar CAD and US dollar yen. So those are extended to the upside, but not massively. So again, I'd rather see a little bit more extension. I don't see any reason why this US dollar won't continue for a couple of days. We've got a lot of news coming out this week on the dollar, starting from Wednesday. So we've got the GDP figures coming out. So there's a good chance we're expecting a very big increase in GDP on Wednesday. So there's a good chance we might get some negative dollar moves coming. So there's a lot of news. It could go either way this week. So be a little careful. Just see where we're going. Right, so we've broken along on the NAS. We've got an ORB now on the S&P. Don't want to be in that Dow. So going along on the NASDAQ. $20 to draft. Don't want to do a draft. I just want to commit that. I don't want to buy again. All right, I'll buy again. Fine. I hate using new software. Doesn't make sense. It doesn't work like everything else, does it? Right, yeah, so NASDAQ's broken along. Dow Jones is probably going to struggle to break short if the NAS is breaking up. So one of these two is going to win. So either the NAS is going to reject here and drop back down again, or the Dow is likely to come up and stop out. So upside target on the NASDAQ is below the Globex high today. So that's Globex high. So just shy of that is a couple of R to the upside. Dow Jones is just going to have to break to the downside. Nothing wrong with that as a target for a partial. Obviously, we've got this propulsion gap, which is part of a V-shaped recovery. So it's not a great propulsion gap, but it is Thursday's low. So heading down there, you're probably likely to find some support if we get down there today. S&P, depending which way we go. Again, potential resistance, turn support as a bounce. Upside, you've got Globex high. So all targets all within reach today. So it's just a case of seeing which way the market decides to go today. At the moment, it's a little bit undirectional. We'll see where we go. Afternoon, Pleiades. Trading funds. There's also a consistency rule. Is there? I don't think they had one in the evaluation. Oh, yeah, they do. 20%. Oh, no, that's for your scaling levels. That's not for evaluation. That's for scaling. I don't know if they've got one in evaluation, but it's a bit of fun. It's $9. I just thought, yeah, I'll have a go at that. See what happens. I'll probably just get stopped out on it today. I'm up $600 at the minute. Literally just been pressing buttons at random. Bought oil this morning, which was nice and easy. Got an oil trade on from down here somewhere. Got out there and there. What else did I trade this morning? Euro pound. Tried to mean revert that this morning. That didn't work. So bought out. Bought out. Buying a steam train. Not a good idea. So yeah, we'll see where we go. That's rejecting the NASDAQ. So it looks like the Dow is going to break short. ADR on, excuse me, Aussie dollar CAD 150. So all these RSIs today, just be aware. So Aussie dollar, they are selling the Aussie dollar ahead of Wednesday's CPI. We're expecting CPI to drop on Wednesday. They didn't reduce the rates when they said they were going to last time round. They kept them at 3.85. They told us they were dropping to 3.6. So the fact that the CPI forecast is coming out as a lower number on Wednesday indicates basically that the likelihood is if we get a 0.8 or a 0.7 or that drops down to 2%, that is their target. They will announce that they're going to do an interest rate reduction. They could even bring that interest rate reduction forward. So the market is selling off the Aussie in preparation for an announcement that they're going to drop interest rates. It's unusual when you get a forecast for an interest rate drop for them to keep it where it is. And it means almost with 100% certainty, the next time round, it will drop. So they're selling the Aussie off today because we only got 2 days until CPI comes out. So bear in mind that as well. If you're trying to mean revert this, you're mean reverting a fundamental. Doesn't tend to work. Aussie US as well. That's coming down pretty hard. 125 ADR. CAD Swiss. So everything that is Swiss related is going because of the euro. And again, this euro, no reason why this won't continue to sell off. It will pause at some point. Possibly flag. It could pull back before it does a new leg. Could do any of them. So if you are going to try and mean revert it, you really need a strong signal. Wait for some kind of structure shift. As you can see, you haven't had one on this new high. You just haven't had a reversal alert on this all day. There's not been any shift in structure to the downside. Every time some sellers have stepped in, the buyers have stepped in and taken it straight back up again. Same with the euro pound. I tried to mean revert here. And yeah, that was the reversal alert there. It just didn't get anywhere near it. Straight back down again. Oh, look at that. We are starting to roll over, or we're trying to pause down here. So this could be 200 ADR. It could be a move starting to form. The sellers have certainly stopped for the last 20 minutes, so possibly. So yeah, Euro CAD, all of these basically, there was a reversal alert there on that one. You literally had that one big push up, and that was it. Straight back down again. So, just be a bit careful with these. Normally, when you see an ADR, it's a good mean reversion opportunity. When you see an ADR because of a fundamental shift in the economics of a country, it's a difficult one to mean revert, because these things could go on for unlimited numbers of days. So it's changed. The Europeans now totally different relationship with the US. They've now got to pay for a lot more stuff they didn't have to before. They've got to find money from somewhere. So until that's announced by Lagarde, there's no reason why the euro should really strengthen up. Weekly range just hit on the euro CAD. There we go again. So today, euro CAD average weekly range is 167. We've done 168 in 12 hours. So just be careful trying to get on these. They will pull back, but where to? Very, very difficult to sort of say. Stalled out on the indices. Oh, this is a tricky one today. Okay, so Dow has broken short, NASDAQ has broken long. S&P hasn't broken at all. What do you do with that? What I'm going to do with it, I'm going to put them both to break even, because I don't trust either of them. One of these is going to go by the looks of things. If that goes, that won't. If that goes, that won't. So I'm moving both of these to break even. I've got 2.5 banked from the morning. I'm not going to risk a double stop out on a whipsaw today. I'm hedged. It's unusual for them to go in opposite directions. So the S&P hasn't broken yet. So I have got a clean break on the S&P. If one of these goes, if that flies, obviously the S&P is going to break long. We'll come up into here. But we've got to get through that high on the NASDAQ. Got ADRs going off all over the place. 200% on Euro CAD. Oh, they're selling this euro to death. CAD Swiss weekly range hit. Again, euro weekly range done on the CAD Swiss. Normally does 54 pips in a week. We've done 54 pips already today. So huge moves across the board. We also we've got this lovely big spike up on oil today. This is partly to do with what's gone on with this deal with Europe. Oh, crikey. So I'm just hitting target everywhere at the moment. 1 second. Shorted gold as well. I don't trade gold normally, but I've got a scalping strategy that I'm testing for somebody. It's kind of liking it, if I'm honest. It runs on the 1 minute chart, which I don't usually like, but this one I do. So it's just hit target. So I just need to check what that's going to do next. So yeah, this move on oil, likely because obviously what's happened with Europe. So the part of the deal with Europe is to do with energy. The EU will invest 600 billion more than previously in the US. So the deal is basically for them to invest a lot more euro into the US. Obviously, money flows out of Europe into America. Therefore, the currency is obviously going that direction. EU has agreed to buy 750 billion worth of energy. Now, that 600 billion is not to do with that. So there's an additional 750 billion of energy. So I'm assuming that that is going to be oil prices. So what we've just had is Europe deciding to buy oil from the US, which depletes oil stocks. Oil stocks will now be more readily available from Canada and Saudi, which means that the price of oil will go up because we've just had an agreement for this lot to be taken off the market by the US. So this is partly why we're getting this pop here. The second part of this pop here is to do with Russia. So Russian oil production was starting to be capped, and Trump is now coming in harder on Russia, which means that likelihood is there'll be less purchases from Russia, which means supply drops, which means price increases. So this could well be the start of a leapfrog on oil pricing to go much higher as well. So all of this stuff is all interlinked, basically, but it's the start of potentially new trends. So just be very, very careful. If you're going to enter into new positions, you want to be getting in when we're really extended on the 80s, 20s, 85s, 15s. Wait for a really, really strong move and get out of it fairly quick. Protect yourself, because there's likelihood they're going to continue. So we're pulling back on the NASDAQ propulsion. They've added twice now. So I think we're going to stop out on this NASDAQ. Going to take it off. You watch it fly now. I don't really want to trade anything on this thing. I can't get any leverage. There's no leverage. Right, there's some chat window gone. 1 sec. Afternoon, Michael. Question. I am 6 positions in on Euro Pound. Should I TP for the positions in profit after a move like this? Trade is not at break even yet. Up to you. So depends where your positions are. Obviously, this is a gift. So you can use all of this money to reduce your drawdown on lower positions. So look at your dash, and if you close out all of that, look at where you can do drawdown control to minimize your lot size. So I don't know, no one knows whether this is going to be that sort of move, parabolic. If you look at it on the 4-hour time frame, I said about this, we looked at this one, I think it was on Wednesday last week, and I said, you've literally had nothing but flag breaks on this. This thing hasn't pulled back on this leg at all. It has not pulled back. There hasn't been a decent move. Market moves in structure. This is parabolic. So the pullback on this is likely to be strong, very strong when it happens. And this is what I said about here, didn't I? On Friday, I said, when we get to this level, if you need to do aggressive drawdown control, that is where you do it. It just so happened that obviously the deal came out over the weekend. So we've got a large sell order being added here with a load of new sellers potentially. So this, I think, has got the potential to at least revert 50% of this. The downside to this one is there's no advantage in buying the pound at the moment. That is also weak. Gold's falling off a cliff. So I would be watching, it's not a great monthly high that, but you've got this weekly level here. So I would be watching this sort of area here for potential pullback, which means you've got roughly another probably 1.5 ADR. But the thing you need to think about is your account, your leverage, your margin. If you take all of this off and it pushes back up, you can add that all back on. So let's say, for example, you've got a trade here, there, you've got another trade up here. You might have one there or something. You could take all of that off, as profit. It pushes back up into here, you can add it all back on again and then take it off on the next leg down. So if that happens, that's the right thing to do. Take it off there, because in the pullback, you add it again. If it gets stuck at these weekly levels and just goes into a range for a bit, it's still the right thing to do, because what you're doing is you are now stuck and it's not going to get straight down to there. obviously the other option is we flag and break down again tomorrow. So look at news coming up for the euro. We've got Spanish CPI coming up, German CPI coming up, and then we've got the flash estimates coming up. There's nothing impacted for the euro at all. Lagarde hasn't said anything about monetary policy. I suspect it will be bullish what she says about monetary policy, because they're certainly not going to want to reduce the interest rates, I don't think, now. So it's not going to be massively bullish, but it probably won't be bearish either. So not an easy one to answer. But, you know, look at how long you've been looking at the profit take move coming, and look at where 50% retracement takes you. That's a 38. That's a 50. So these propulsion gaps at this accumulation for 2 weeks is likely, if it's going to continue bullish, a bounce point. But you've also got this low here, which they bought multiple times. Yeah, so we know there's buyers sitting at 38 as well, but even that is 1.5 ADR away from where we are at the moment. Difficult. It's a monetary shift. It's a policy shift, basically. The Europeans have just suddenly gone, oh. So imagine having your fixed rate energy or your mortgage at a fixed rate coming to an end, and suddenly then the mortgage company turning around going, you know, you're on 1.8%. You're now on 3.5%. Oh, all of a sudden your disposable income has disappeared. That's what the Euros just had. Their disposable income has just gone. They were planning to spend X, Y, Z on energy. Now they've got to buy it from America for 700 and whatever billion, which means they've agreed a deal for that. So anything that changes in oil pricing, they don't get to take advantage of it. So it's not good business for them in that respect, but there will be other points that are good for them. Car exports and things will be better. So, you know, it's not bullish for the euro. So I would hold it. I've got Euro CAD short. I'm not getting out of any of this. I can't get out of it anyway. I mean, my average is all the way down here. Look, I've got TP set here for these trades, so I can start doing some drawdown control. But, you know, I'm in the same boat, but I'll be holding this. In fact, now there's an argument for actually trying to squeeze a little bit more out of it. Potentially. You know, it's got further to go, isn't it? Afternoon, Mumo. Hard knock life, hitting target on everything. I know, it's difficult, isn't it? Stopped out the Dow. Out the Dow, short. Which means potentially we will be going long. So maybe I should get back in the NASDAQ. Why can't I get more than that on? That's only 53k of margin. Oh, I've only got 50k of margin, haven't I? God, I hate this platform with a passion. So where's my TP? Why won't it let me put TP in? Take profit price must be positioned above the ask price. Well, you haven't put it on the screen. What's it doing down there? Not convinced about this bit of software. How do I commit that then? There's no commit button. I don't want to buy. I'm already in it. I'm not. I can see why this is $9. Anyway, right. So Dow about to trigger on the buy side potentially on that. So I want to see this kind of hover a little bit ideally and then break that high. We are also long S&P. Market's starting to slow down on the euro as well. One ADR TP is just above 38 retracement on the euro pound. I mean, there's, think about a normal market structure move. A flag break is a 23 retracement. So if this is going to go and be massively bullish from here, that's where you're going to. It's not massively bullish. The euro's just got a massive bill. So I would say worst case scenario, you're looking at 38. Best case scenario, I think you're looking at this coming all the way down here. Not straight away, not like that. But, over time, I can't see any reason why the euro should be massively strong. So 38 retracement, if that's your one ADR target, that shouldn't be a problem to hit. You should hit that by Wednesday. I think you'll get another ADR out of the euro tomorrow. I don't see it's getting massively strong. But, Lagarde might come out and say something completely different. She might come out and say the trade deal that we've just put in place was all part of our backup plan to do with monetary policy, and this is what we're going to do next. And all of a sudden, everyone's like, really? Okay, we need to be buying the euro. They've just invested in some massive AI thing in America. And all of a sudden, it's going to be hugely positive for the euro. Don't know. We're waiting for her to come out, aren't we? Brian, I believe the majority of this 750 billion is going into liquid natural gas. It hasn't actually said what this is yet. But, you can see that the market is anticipating it to be oil-based to some degree. It's a case of if it does go into liquid natural gas and there's more of an investment in that, they will probably reduce oil production, which is still going to drive the price of oil up. So we'll have to wait and see. See what they say. Do I really want to be going long after a 10-minute rally on the Dow? I don't think I do. I'm just going to cancel that off. Just for me personally this morning, I have got 2 longs on indices. There's no point in taking one here in case it pulls back and does that sort of move, because if that's going to happen, I'm just literally going to get in, stop out, and then it's going to rally without me. These I'm already long. That's protected. So literally I've got no risk and 1 breakout. So there's no point. I'm not going to take that today just because of my situation, but obviously this could just go screaming to the upside. So we've got a very big propulsion gap forming here. So that's obviously a propulsion gap. If this sits around up here, we've got a big bull move underway. So looking for some kind of pullback continuation to come and test the Globex highs today. Actually, that's not the Globex highs, is it? Globex highs all the way up there. So looking for that type of move on the NAS. Is that the NASDAQ? Sorry, that's the Dow. I've gone long on the Dow. I'm really doing well on this platform, aren't I? I was wondering why it wasn't allowing me to get the margin on. Because I was trading the Dow again. I thought I was in the NASDAQ. Good job, it's funny money, isn't it? This platform is called Trade Locker. So a lot of the prop firms now, specifically the CFD prop firms, because of what MetaTrader did and pulled the rug out from a load of prop firms in one foul swoop last year, a lot of the sort of the smaller prop firms out there, because they can't afford the licenses on MT5, are looking for alternative software vendors. And obviously, TradeLock has been around for a bit. It's a web-based platform. This is the desktop version here, so this is not a browser. This is actually desktop. But a lot of prop firms are using TradeLocker now. If you go to the TradeLocker website, they have become affiliate city. Look, so open a brokerage, open a prop firm. Yeah, they're white labeling basically. This is why there are so many of them. If you go to the hub and go to the hub and go to prop firms, all of these guys use TradeLocker. Never heard of any of them. Yeah, these are basically, I can set myself up this afternoon as a prop firm. I can white label this entire platform, ready to go, full front end. I just set what I want to charge for evaluations, press a button, and bang, I'm in business. It's that easy now. This is why you can't trust 90% of these little ones. E8 Markets used to use 8 cap on MT5. They got dumped, so they've moved over to here as well. E8 obviously been around for a long time. Blue Guardian have been around for quite a long time as well. Blueberry have gone over there. Blueberry's a big broker over in Australasia. So there's a few names which have jumped onto the bandwagon, but the vast majority of these are all kind of tiddly little new firms, and this one that I'm with is one of those. So, and obviously, a lot of these now are doing crypto. So, with most prop CFD-based prop firms out there, obviously it's all MT4, MT5, so there's no access to crypto markets on the majority of them. They've got a little bit of access, but not a lot. This, I've got access to virtually every crypto market out there. So you can trade absolutely tons of crypto as well, which is obviously 24/7. So they're really sort of ramping up the number of instruments that you can trade TradeLocker. So be prepared for an absolute flood of new prop firms, basically, that are on this platform. So far, it's all right at using TradingView charts. If you're familiar with TradingView, it's going to be very familiar to you. But spreads look pretty tight so far that I've seen. So, might well be the new norm. But some of these places, I don't even know where that is. Is that Kyrgyzstan? You really want to sign up with a prop firm in Kyrgyzstan? Few in the UK, UAE, St. Kitts, the usual sort of take cap, 8 cap clone. Puerto Rico, Malta, few in the US. Yeah, and don't forget, it's illegal to trade CFDs in the US. Yeah, be careful of these ones. CFTC are going to be looking into this because you can't trade CFDs in the US. If you are a company based in the US setting up trading CFDs, they're going to be watching you, aren't they? So yeah, just be very careful with some of these. E8 are pretty good. They've been around a decent amount of time, so probably one of the better ones. I'd imagine this is an affiliate link as well. So yeah, it's an affiliate link. So basically, this TradeLocker are all set up with affiliates as well. So they're making a kickback out of every click you make as well. So just be aware. It's the usual stuff. Everybody's in it for money somewhere. S&P's out the highs. So we are breaking up, but we're obviously swimming a little bit against the tide today. So there you go. Would have broken long on the Dow. So that would have been triggered long. Stop would have been down here. So it's dangerous taking a long after a 15-minute rally. Obviously, there's a strong chance of some kind of pullback before we push. NASDAQ stalled out. So, it's the market's heavy today. We are obviously coming down today, and we are trying to buy against the trend. US dollar still rallying at the moment. Oil's pulling back. Little bit of a pullback on the euro. So we're putting our first inside bar in here. So we've got 42 minutes left on this candle. Long time to go. But this is your first potential inside bar. We did get an inside bar there, but obviously very bearish inside bar. But this is your first pause of the day at 200 ADR. So if you're looking for a mean reversion entry, we are stalling. So if you drop down to 5-minute time frame, there's your 5-minute reversal alert gone in. So nice retest as well. So that is potentially a little long opportunity there. That might be worth a shot. How much margin can I get on? I've got 23K. 74% margin that takes me to. I mean, the pullback on this could be phenomenal, couldn't it? But it's not going to be that big. I'm going to have a go on that euro pound long. Just with a quick 1-to-1. Try a quick scalp. Difficulty with this type of trade is obviously there's no support or resistance today. It's literally just been parabolic selling. So you got propulsion gaps literally all the way down. So if it's going to pull back into an area of sellers, you've got millions of them. It's just nothing but selling today, isn't it? So very, very difficult to pick a target on something like this. Got a little bit of bullishness came in there, stomped on. Little flag break, stomped on. Accumulated, stomped on. So the danger you've got here is what we're actually seeing is these sellers here that have broken the new low are going to add more size in here. So this will just get stomped on again. And we'll be down at 225 ADR or something. So either, we might push up into here and sit around for an hour or so. If that's the case, take it off. It's no good. But it might be the start of a pullback. So, just watch the price action. 15-minute time frame. Your reversal alert is coming up at 175 ADR. So that's the last batch of buyers here. I mean, it's not really buyers, is it? It's a bull candle, but you wouldn't exactly call that buyers, would you? So it's the same sort of place as the last batch of buyers started their rally. They got run over. So if we break above that high, we are obviously starting to shift structure. So you are literally swimming against the tide today. Anybody got any pairs specifically they want to have a look at today? Jones. I'm liking this little strategy. I'm building an EA for someone at the moment, and it's a 1-minute time frame strategy, which I hate 1-minute time frame strategies because they're just chop. Looks like I might stop out the NASDAQ. But yes, it seems pretty effective at the open in my testing so far. So stay tuned. Might start using it. And a nice little profit on gold today on that drop. So gold basically broke out at the open to the downside. So your ORB is there. That's your 5-minute ORB on gold. It's something I'm going to start looking into because obviously gold Look at that swap long, $38. Wow. Do not hold gold long. That's ridiculous. So yeah, I mean, because obviously gold is a futures market, it tends to, it seems, open pretty aggressively at New York Open as well. Obviously, so with all the indices, obviously we know that's when we get our volume coming in. Gold is doing very much the same thing by the looks of things. S&P is back inside the range, out of the NASDAQ. Wrong choice to go long on the NASDAQ. Be giving all my profit back today, aren't I? So yeah, gold. I haven't actually done any testing with ORB on gold at all. So it's something I might start running some tests on in the strategy tester and do some system parameter permutation tests on gold. See if I can get some decent breakout settings for it. But there are days I've noticed where gold just sits around and does absolutely nothing. So it's a case of whether or not it breaks enough, like the indices do, as opposed to sitting there and going into whipsaws, which obviously the indices also do, but nowhere near as often. So it's a case of doing the analysis basically, but might be worth looking at for low time frames, just for sort of quick 1-2 ADR moves, 1-2 R moves, to add into the portfolio, because what I'll be able to do then is remove one of these two. So trade the Dow and one of those two, because obviously there's a lot less correlation between those, and then obviously trade gold. So gold has been the best break today so far by a long shot. Really, really, really gone. So obviously this is basically you're trading the US dollar. So if the US dollar rallies at the open, you break to the downside. If the US dollar drops at the open, you fly to the upside. So it's another good instrument potentially to put into the portfolio. So worth some tests. I'm constantly asked about gold set files, so might be nice to actually have one. I've been in EuroCAD that long, it's got its own account. Yeah. Me too. US dollar yen just hit its monthly range. It is the end of the month. We'll give it that. Yeah. I have taken one profit off the US dollar CAD, but yeah, I've been stuck sideways for 4 weeks. So since that trade was put on, we have literally been sideways for 4 weeks. Absolutely the wrong place to get in. That actually wasn't my entry, was it? My entry was back here. So this was a breakout entry, looking for a continuation short. But yeah, sideways, absolutely sideways. So my entry on that was back in May, 10th of May, 13th of May, probably a Friday. Yeah, swap costs. See, swap costs not too bad on it. Great, but obviously not hideous. Is that general 1 minute scalping strategy, or is it ORB? It's an ORB strategy. Yes, it's a variation on ORB. Somebody's asked me to code them in EA. Similar to my strategy, but not similar to my strategy at all. It's very different to my strategy, but they trade gold. So I've stuck it on gold and I've stuck it on the indices as well. And so far, it looks like it's doing better on gold than indices. I need to really get a P&L out, but yeah, it's up 10% in the last 3 days of testing. So obviously I'm using high risk. Don't think it's normally meant to do that return, but anyway, you never know. Doing well. NAS acting bipolar? It is. It's just a very big pullback. So we just pulled all the way back down inside the range and closed back at the 5-minute ORB. It's not going anywhere today so far. Rotation day today at the moment. So my only real hope today, I mean, if the market suddenly collapsed down for some reason, obviously I'll short the NASDAQ, but the only real hope today is that the S&P can regain some of its losses today. And we got that long on, but other than that, then I'll be taking an S&P break short as well. So potential loss today is around about 1,400. So I'll still clear $1,000 today. If it all whipsaws all day long. Euro pound doing great. So I'm 3% away from a margin call. Look. You get margin called at 90%. I'm on 87.8%. I've got 2 trades on with small lots. Literally, I've got $600 risk there, like 1.1%. You know, I'm not asking for a lot. It's 1.1% risk. And the Dow trade is in profit. And I'm still 2.5% away from a margin call with 2 trades on. You can't. I mean, it's guess if you're just trading one symbol, fine. But, you know, you can't add any size. You can't add position size. I mean, you just got to take small risks. They just want you to take tiny little risks, don't they? Which is just going to drive everybody mad and they're going to stop out. So that's the point. That's their job, isn't it? They don't want you to win. What do you think about Swiss yen? It's out of my portfolio for the moment. We're putting back off of 125 ADR today. So this propulsion move here, this isn't, I mean, this is kind of coincidence. This is a range, but this is part of a V-shaped recovery, this big propulsion move. So this isn't them adding in size here, I don't think. This is just part of the range. So it's not going anywhere. It's stuck. All the yen pairs are the same. So if you look at all the yen pairs at the moment, we are stuck. We're just sideways, can't go anywhere. So it's unlikely, I think, that you're going to go anywhere until Wednesday. Late night, actually early morning. It's unlikely you're going to go anywhere until Thursday this week, when your interest rate decision comes out for the yen. There's no forecast for them to drop or go up. However, the next move for the Bank of Japan is to 0.75. So they have indicated that they are going to raise interest rates, which will strengthen the yen. So we should see things starting to come down. So if you look at what you've got on with the yen at the moment, obviously, you've just had negative news for the Eurozone, which is unlikely to do anything but continue. So the Swiss and the Euro will move down together. Yeah, they're going to do roughly the same thing. The Japanese, if they come out bullish about interest rate changes next month to the positive side, is going to strengthen the yen up. So you've got the Euro and the Swiss reducing basically on the new deal. And then you've got the yen potentially strengthening on Thursday when they announce that they're going to increase interest rates. So it's whether or not you can break out of those lows, which is obviously what needs to happen. So we are in accumulation now, but after a massive bull run with no profit take. Yeah. So, I mean, again, look at this move. you're looking at that as being the move, then you're looking at least a retracement down into here. But there's no real, I guess you would say that is probably the most logical resistance to the upside that we might use as support. I mean, it's not really great, but I mean, that's an area you've retested multiple times. So we've got this propulsion gap here is potentially a good target to the downside. This is your most recent upside resistance, which was around about 2 to 3 days, which we broke through. So it's this propulsion gap here. So there's your 23 retracement. There's your 38 retracement. Obviously, it could go way deeper than that. Depending on the time frame you're looking at, you might be considering this all one big move. Yeah. So look at the 24 and the 72 and project those out into the future, assuming that we do not continue to move. The EMAs will flatten, which means that we do something more like that. So even a flag break, you're looking at roughly 400 ADR, 400% ADR to the downside. And obviously that monthly is, or rather the yearly, is your bounce point. There's loads of room. I mean, when you get something that parabolic, you know, the move in the opposite direction is usually as parabolic. So it's got everything going for it, but it's the yen, you know, and the yen is notoriously unpredictable. A lot of people don't trade it because it's it can be a pig and trend a lot. 184.56 is break even. 056. Yeah, so your break even's 175 ADR, which is easily achievable. Look where we are now. Yeah, so we've pushed down. Obviously, we're pulling back now. That right now is only an ADR away. So all you need is one ADR of movement. 8 hours. You could be down there in 8 hours tomorrow. Thursday, you know, heaven forbid the Japanese decide to go actually to 0.75 interest rates, you're going to be down here. This is the problem with trading. It doesn't matter how much you look at technicals, how much you trust Fibonacci, how much you look at support resistance, whether you use propulsion gaps, whether you use smart money concepts, whether you use Elliott wave, whether you use harmonic patterns. None of it means anything. Fundamentals are what drives currency up and down. It's economics, basically. So if the economics, as they have today, of the Eurozone change, it will change the direction of price. If on Thursday, the Japanese bank comes out and goes, actually, we want to accelerate investment, they put their interest rates up by 0.25%, the Japanese yen is going to go flying. If they come out on Thursday and say, do you know what, we can't sustain these 0.5% interest rates, we're going to go down to 1/4, it's going to be back up there. But the thing that's going to make this move is the Japanese bank and Lagarde for the Eurozone. The SNB will just get dragged along with the Eurozone. So, you know, this is trading. It's all about risk management. It's not about trying to predict which way things are going to go. You can look at the past as much as you like, and this is all Fibonacci is. Fibonacci is an indicator that basically creates patterns that we have seen play out historically at levels. Yeah, but these levels will only play out if the central banks decide that they want the market to move in that direction or need to move in that direction. There's nothing you can do to control it or predict it. Yeah, I've seen many things. I've been stuck in Aussie, New Zealand for months, literally months, in squeezes here. Yeah. you think, oh, this can't go any deeper. It can't go any deeper. It can't go any deeper. It can go as deep as it wants to. When the Australians started reducing interest rates and the New Zealanders didn't, it collapsed. There's no indicator on the planet that said this is where you sell it. Happened to be an RSI extension above 80, which is what I go on about all the time. Look what we got here. Funny that. But it's, there's nothing you can do to predict the future. You can look at history and go, every time we get above, it drops. And it does 90% of the time. But there will be instances where it doesn't, like here. Whoops. Finally, bankrupt. Yeah, can't hold that long. You're going to have to get out sometimes. So, it's all about fundamentals. This was a fundamental shift in economics between the Australian and New Zealand interest rates. We didn't know that was going to happen. They didn't know that was going to happen. Their countries got pushed into it, and that happened. There's no one at that point in time was sitting there going, do you know what? This is the exact extension we had back in XYZ time where XYZ happened. There's no horizontal line they were drawing. There was no trend line that got broken. The fundamentals shifted. That's what drives it. So when you look at something like this, you can look historically in the past, at what normally happens when you get a move of that magnitude. Yeah. Sometimes it will just flag and go another leg. Sometimes it will push and come down 50%. Sometimes it will be 100% reversion. Most of the time, you'll get at least a flag break out of it. But sometimes it won't. Yeah. But there's no reason now, today, for the Swiss franc to strengthen up. The Swissy have dropped their interest rates unexpectedly. Yeah, the last move the Swiss National Bank made was an unexpected interest rate drop. Yeah, they didn't tell us. Yeah, actually, it wasn't. There was a second to last move. And they do it all the time, look. So they were there and they said, we're going to keep the interest rates at 0.75%. Surprise. And since then, Swiss franc's been weakening. We have had conflict in between, which has driven it back up again. But now the euro is getting hammered. The Swiss is going to get hammered. The interest rates are the most attractive on the planet. So there's no reason for you to buy tons and tons of Swiss franc because they're not going to give you any interest. So therefore, you will put your money everywhere else but the Swissy. It's bearish. The Europeans have just had a big bill. It's bearish. Swiss do most of their business in Europe. It's bearish. The yen, neutral at the moment. So you've got a bear against a neutral. So there's no reason for it to rally anymore. But that's today. This is why we haven't rallied for ages. But it's not a given that it's going to not do that. Yeah. This is when moving averages become useless. Moving averages catch up with price. So people look a lot of the time for moving average bounces. Yeah. What happens a lot of the time is moving averages flatten out as price flattens out, and you bounce off of moving averages without actually pulling back. This is a squeeze. Yeah. But there's no real fundamental for it at the moment. So it could go either way, but it's more likely, I think, to go down. But I don't control the price. They do. Stopped out at the NASDAQ, obviously. It is holding at the moment. Euro pound retest is held. Potentially. So this is exactly where we're going to start to meet resistance. Yeah, so this propulsion gap here was the sellers breaking that support. So everybody here that was long flipped short and will be trying to add positions in short here. So if they are now going to get overpowered by profit taking off of that leg, we're just going to grind up for the rest of the day some distance. How far? We'll have to wait and see. Not going far. Afternoon, noob. Brian, I'm on Day Traders Prop. I don't know what that chart means. Candle seems somewhat different on the 5 minute. Ooh, big order just came in there. More selling coming in on the euro, potentially. Doesn't look that much different to me. You've got a higher high there than I've got there. That's just spread. This is CFDs, don't forget, not futures. You know, this is CFDs. It's a totally different instrument. So this is the futures market, I'd imagine, isn't it? So you are going to have a different price to me. But it's roughly the same. But that's the difference between futures and CFDs. I really want to add to this. Just want to add. I have no margin. I'll get out the euro pound I can add to the DOW. Takes me to 80. Add a little bit to the DOW. Reducing risk. Oh, hang on. So I've got 53% margin used there. If I adjust that, does that increase my margin? No. Interesting. And it's grouped my stop losses together, isn't it? I've got loads of margin to use, so I can hit another one. Now I'm on 88%. That's too much. I don't like this platform at all. This is why I don't like futures. There's no control. This is CFDs, but it's like a futures platform, isn't it? There's no control. Look at my margin now. I'm about to get margin called. They're going to shut my positions out on a margin call because I tried to add to a winning trade. See where that goes. Market's like chop suey at the moment, so nothing really directional. So we are either going to just break up here. It's holding well to the upside at the moment. It's more bullish than bearish, as you can see, but it's not particularly directional today. So it could be a rotation day, meaning that we're just going to sit and flip-flop. So I am going to take off my NASDAQ shorts. And if we are going to go into rotation, obviously I'm going to stop out on the S&P and flip short on the S&P. That is going to be at the low from Friday. So there's potentially resistance support down there that's going to drive this back up again. So worst case scenario, I'll take a loss on that and I'll take a loss on that if we just go into rotation, which will obviously drop the profit for the day down. But I don't want to double up on that and take a NASDAQ short as well, because that's going to get rid of my entire profit for the day. So I'm I'm just going to leave this S&P running this afternoon and see if we can get a break on the S&P. Typical. Now I've taken the euro pound long off. Euro pound is taken off because obviously I needed the margin for my Dow trade. So take it off the euro pound. Euro pound pops. What does the Dow do as soon as I put an add on? Drops. Welcome to trading. It's fun, isn't it? Right. I'll be back on Wednesday. So Wednesday morning for the members stream, I'm going to be looking at a new website that I've been working on with some colleagues I've got in trading. So I'm going to be giving the members access to that website so that they can start using and testing all the features and do a bit of bug testing. So you'll get advantages, obviously, because you'll have early access to everything and it's all free, which is normally going to cost you money. But that I think is now ready to go. Still a little bit dicey on the builder side of things for there's an EA and indicator builder in there, but I've tested it this morning and it was a lot better. So it's pretty good, but there's still going to be a few bugs in there. So that's what we'll be covering on Wednesday morning in the member stream, assuming they haven't broken it between now and then. And then I'll be back Wednesday afternoon. We'll obviously have a look at what's going on with the news. So by the time I'm on Wednesday afternoon, we'll have had the Aussie CPI numbers, the unemployment forecast for Friday's non-farm payroll. We'll have the GDP numbers for the US as well. So we will obviously be trading through the Canadian interest rates on Wednesday afternoon. So obviously bear in mind this normally has an impact on the dollar, which obviously drives the indices because they're priced in the dollar. But I'm not quite sure what the relationship now with these new trade agreements is going to be with the CAD and the US moving forward. It might be a case of they don't actually move as much together anymore. So it'll be interesting to see what the US reaction is to that. But we got the press conference obviously at 3:30. So an hour after market open, we're going to get some directional bias on the Canadian dollar as to where they're going next. And obviously they could change the rate. I think it's very unlikely. If you look at the Canadian history, we've had one in the last 2 years where they've just done something different. However, we're in a different situation now, aren't we? Yeah. So trade agreements and everything, there is potential for them to do something shocking. So if not for anything else, then to annoy the dollar. But anyway, so that's on Wednesday. So I'll be on when that's being announced on Wednesday. And if you remember, I'm around Wednesday morning for that stream as well. So yeah, good luck with this afternoon. It's an absolute chop fest. So yeah, it's either going to go or it's not. If it goes, brilliant. If it doesn't, be prepared to just lose today. There's nothing you can do about it. So yeah, I'll be trading that out and seeing if I can get this profit up. I'm trying to get this done in a couple of days, this evaluation, which is why I'm getting in fairly heavy. But I didn't realize how little margin you get given. This must be 1 to 30 leverage or 1 to 10 even. Does it tell you what it is? Details. Yeah, 1 to 10 leverage. This is futures leverage. This isn't CFD leverage. This is pointless. You might as well trade with any other prop firm. The leverage is just deadly. I'm about to get margin called. Ooh, come on, give us a margin call live on air. 90% is margin call. They don't stop you out until 10%, 100%. So I think actually you do have your entire margin to play with by the looks of things. But look at that. I've got like 0.12 CFD lots long, and I've used my entire margin. What if you get a runner and you want to add twice to it? Just useless, isn't it? I can see why they're doing it. It just makes it really hard to make money. Anyway, it's not going to give me a margin call, is it? Oh, there we go. Oh, 89. Not quite. Oh, hang on, 89. It's 90, isn't it? All good fun. I'm completely bearish at the moment. Good for you. you stay bearish. That's the way it's going now. It's gone bullish and bearish about 100 times in the last half an hour, isn't it? Wow, I thought it said 1 to 30, which is bad unless it's totally useless. Yeah, but yeah, it's the 1 to 30 is bad leverage. I'm not used to that. I'm used to trading 1 to 500. 1 to 200, bad. 1 to 30, don't do it because it's pretty much useless. 1 to 10, I just can't even get a size on. So who knows? Right, I'm back on Wednesday. Anything you need, let me know. I'll be in Discord or Telegram. Other than that, I'll be back on Wednesday. Have a good day. I'm trying to find my stream button. I am going, honestly. I couldn't find the button. See you next time.